Vibes are good right now. I think ignore the noise. Best way to ignore the noise is to get in the arena, start building.
Nothing said on dYdX Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
What's up, guys? Welcome back to another episode of dYdX Research. Today I'm joined by Dan Smith and CEO and co-founder of Jito Labs, Lucas, also known as Buffalo. How you doing?
Good. How are you guys?
Pleasure to be here, man. How are the vibes? We're at DAS. We got a bunch of suits walking around.
Yeah.
I've never seen you in a suit coat before, so this is already exciting.
Yeah, try to do my best here, but I think the vibes are pretty good. It's a very cool conference, cool to be in New York, and it feels very professional, which is first for me for a conference. It's most of the conferences are a little more DGen leaning. So far, it's pretty professional, so it's cool to see that.
That's what we went for.
Get you a man that can do both, baby.
Yep. All right, diving into it. Lucas, you guys put out a note on JitoSOL Securities this morning.
Yeah.
Or specifically about how it's not a security. Do you want to talk a bit about that?
Yeah, there's a report that was released today, Monday. What's the date? No, today's Tuesday.
It is indeed Tuesday. What is the 18th? March 18th?
18th of March.
Yeah. Today Jito Foundation put out a report about JitoSOL and doing a legal analysis on how it's not a security. It's really good reading. I think a lot of projects have these. They might have something like this internal on some legal analysis, and kind of felt like it was time to release this. And so it goes over what is staking, kind of blockchain agnostic staking, dives into Solana staking and delegated proof of stake. So on Solana, the staking is slightly different in that you can delegate your stake to other validators. On Ethereum, you kind of run the validator yourself, or you can delegate the operation of it to someone else. And then it goes into JitoSOL. What does liquid staking on Solana look like? Talks about StakeNet a lot, which is something we invested a lot of time into, basically automating the entire delegation of the JitoSOL stake pool. And then it goes over, all the lawyers will appreciate this, it goes very deep into the securities laws, and especially in the context of JitoSOL, and talks about how it's not a security. So yeah, it's super cool. I highly recommend reading it. It's there's a lot of good snippets in there on how JitoSOL works, how StakeNet works, that I think institutions will appreciate, especially the security analysis piece of it. And I think there's going to be a lot of good snippets in there that kind of get pulled out and summarized. So, I think the SEC hopefully will. I know Hester put out a piece on a few important things that she cares a lot about. You saw your meme coin post on how meme coins aren't securities. I think staking is a very big thing right now. I think liquid staking is also very big. So, hoping to see some more guidance come out from the SEC on those topics.
Yeah, I love that you guys made this public. Like, as you mentioned, a lot of teams do this work, but releasing it is kind of like that next step. And do you think there's been a change of tune? I know you spent some time in Washington not that long ago. I saw you tweeting about that. Like, the regulators want to have these conversations a little bit more frequently, or a little bit more open and interested in that. Like, obviously, that's been the narrative behind the Trump administration, but are you seeing any of that firsthand?
Yeah, for sure. We went and saw the SEC. I think we were the first industry team to go see them. Talked about staking and liquid staking in context of ETFs. I think there's a desire to work with the industry on creating level playing field and more transparent rules and regulations, less regulation by enforcement, and more like, let's work with you guys. Let's figure something out. What makes sense? How do we define decentralization and control and securities and things like that? So it's pretty cool. I never interacted with the administration or SEC previously. Going into them felt on our own. Like, we emailed them and asked to have a meeting, which is kind of weird and like never would have happened previously. So it's cool to do that. And I feel like we can have like a real change there through policy, whether it's on liquid staking or taxes or whatever it is. Like, it's kind of in our court, and I feel like we can do a lot there. So definitely noticing a change and excited to keep doing more work there.
Nice. I love that initiative. And I guess one more follow on here is you mentioned the relevance of this has to ETFs and of course staked ETFs. Right now we have the ETH ETFs live, but you cannot there's no staking associated with that, which to me, as somebody who loves the idea of REV is just a little bit backwards, right? Like the network creates this value, generates it off user activity, and I can't stake my assets to earn my share of that. So in some ways, it's like a worse version of the asset that is being offered to retail, and not only just retail, but also institutions as well. So do you think that there's a good chance that we see a change of tune there and opening up not only the ETH ETF, but all future ETFs to being able to have that staking function so that these assets can earn their portion of network REV?
100%. I think staking, and as you said, investors want extra yield and they want to be exposed to the upside of the activity on the network, not only through the price appreciation, but any yield and REV that accrues to token holders. And staking in these products is purely superior to not staking. You can earn a few percent yield, depends on the network. And there's a few hurdles to hop through on taxes and the way that these trusts are set up. I'm confident that people will be able to structure them so that they make sense. And I think it's a matter of time before there's staked ETFs and liquid staked ETFs. It's inevitable.
Perfect. Talking about staking and yield, I want to get your honest opinions on SIMD 228. Were you happy or sad that it didn't pass through? What would it?
Yeah. I was personally sad. I wasn't in the trenches as much as others, kind of debating this, but I'm a little sad. I think Anatoly said that, we kind of just copied Cosmos inflation curve, and that's what we did. That's fine. There's a million and one things to do when you're creating a network, and messing with the yield isn't one of them. It's okay, let's just copy this, and there's all these engineering challenges and go-to-market challenges that we have to focus on. This is the last thing. And so I think Solana's at a point now where it's more stable. There's a lot of activity. There's a lot of REV. And when you think of why yield exists on these L1s in the first place and why the curve is there, it's to bootstrap the network effects, get the network started, and get network security. And if you go back, zoom way out, and you're okay, why do we need this security? How much is the right amount of security? It has something to do with the amount of stake that's staked to the network. There's probably some number of validators that you want to. And so I think the yield's too high on Solana. I would like to see it lower. Obviously, 228 was way more contentious than I thought it would have been.
No kidding. Honestly, I'm glad the vote's over, just so my Twitter timeline can heal a little bit.
What are we going to argue about now?
Oh, well, the Solana ad, of course.
Yeah. But I think there will be variations of it that might be a little more left curve. So let's just cut the issuance in half, or instead of going down 15% every year, let's do 30%. There will probably be variations of that may be successful, or maybe they won't be.
On the bright side, at least SIMD 123 passed, though. So I feel like that one, 228 took all the spotlight. Maybe you can just give a quick highlight or overview of what 123 is and how that changes the network.
Yeah, I guess I can go back to 228 too for those that aren't familiar real quick. 228 was basically setting a kind of a dynamic rate for inflation on Solana. So there was some target stake rate that you'd want to achieve. I can't remember the exact percentage. Is it 50% or something?
I think it was over 50, but then once you got below that 33% threshold, it started actually increasing.
Yeah. So if the amount of stake on Solana goes down, then the inflation would increase to incentivize more people to stake. If the stake rate was too high, then the inflation would go down. 123 is about sharing block rewards in protocol. This, in retrospect, should have been added from day one on Solana. The stakers and the delegators are today all the block rewards from priority fees and transactions on Solana go to the validator's hot wallet, and 123 makes an in protocol way for the block rewards to get distributed to stakers' stake accounts. And when you think about it, the delegators and stakers they're they're delegating their SOL to the validator, which is giving that validator the power to produce blocks. And that validator gets to produce blocks based on the pro rata share of their stake on the entire network. And yeah, I think that like stakers need to get exposure to REV. The only previous way they've done that is through the Jito tips and this whole tip distribution protocol. There's some validators that are distributing priority fees out of protocol to their stakers or their LST or something. And so 123, it makes it transparent, and it makes it so that stakers can realize some of the REV on the network.
Yeah, the interesting piece here that I noticed was there was sort of like two groups that were pretty vocal or coordinated in their efforts to vote no on 228, but I guess it'd be interesting to compare the analysis of like who voted no on 228 and yes on 123. But it was the custodians, which they actually are incentivized to care only about nominal yield rather than real yield, because they take a commission on the nominal yield, right? So the higher that number is, then the more money that this kind of generates for their businesses, which is actually like a weird, twisted, and a semi-depressing framing here. It's like it's kind of like a marketing budget, right? Like if the custodians are incentivized to push their products onto their client base, that's could potentially a net good for Solana. I don't personally agree with that, but I get where that framework comes from. And then it was actually Lost In from Helios posted a thread that's kind of pointing, there was like a huge block of no votes that came in all within like the same hour. And 13 of the 20 validators that voted no in this block were on the leading the leaderboard for having sandwiches in every block. Which is very interesting. That that's another max extractor type, if you will. That was incentivized to just make as much money possible on the network. Doesn't necessarily care about the network health. So it's kind of interesting to see the dichotomy of like who is leaning yes, who is leaning no, and what their incentive mismatch was. Yeah,
I also think that there's a lot of competition between validators on Solana right now. There's been a race to the bottom essentially on fees. So a lot of validators, especially the small ones, are already at 0% commission for the inflation, and they might have some they might have a small like Jito MEV commission where they get some of the Jito tips, but so 96, there's been a lot of interesting like economic things happening on Solana recently. So you had SIMD 96, which before SIMD 96, 50% of priority fees were burned, 50% went to the validators. SIMD 96 made it 100% to the validators. And then you have the 228 and 123 discussion. There's been a really pretty steep race to the bottom in the smaller validators trying to compete to get stake from stakers and stake pools. So they're already running with 0% commission. With 123, it adds another commission type. And so there's kind of an interesting thing where like that could just happen with 123 as well.
What's up, guys? Welcome back to DYDX Research. Today I'm joined by Antonio from dYdX. Thanks for coming on, Antonio.
Hey, thanks so much for having me.
You started in crypto 10 years ago. How has the environment changed, would you say, in terms of users? Would you say the earlier users were more sophisticated, now we're kind of getting dumber and dumber?
Not necessarily, actually. Honestly, I'd say the users are probably more sophisticated by a lot now than they were back then. But at the same time, it feels completely different. It's like 10 years ago when I was a software engineer at Coinbase, and Coinbase was like 100 people at the time. And it really felt like nobody cared at all about what we were doing. Like nobody even knew what we were doing. But we all were kind of crazy and cared about this Bitcoin thing. Like Ethereum wasn't even invented yet. So that was kind of the only big name in town. But it just felt like, this smaller space, like a lot of new technologies do, of a couple of nerds just being really excited about this new thing. I remember learning about Ethereum for the first time and being like, oh, well, this has the potential to change the world. And it was really all about this like potentiality. Like even Coinbase, I think, had, I forget, but it was no more than like just like single digit millions of dollars a day in volume. And even dYdX is quite a lot more than that now. And right now, I feel like crypto is at this inflection point where we're kind of moving out of hopefully this potential phase, like, oh, crypto could potentially be all these things, and let's read white papers and let's buy into ICOs or whatever and try to capitalize on that, to, okay, let's get serious now. Like, what is it actually being used for today? And how does this make my life better today? And that's really the bar that products should hold themselves to, rather than trying to create these narratives or this hype around what you could be tomorrow. And I think that's really starting to happen with a lot of things within DeFi and in crypto more generally, a bit in NFTs that people are actually using, and that's exciting. But it's not that many people, and I think we still have like at least 4 or 5 orders of magnitude more people to go to onboard into crypto. And that has to be the bar that we hold ourselves to. What products are we building that make, billions of people's lives better on a daily basis, and is not just like, oh, I can ape into this coin and make some huge amount of money. Like, that's great. I have no problem with that. But there's got to be something else too.
Makes sense. Lastly, there's a new administration and potentially a new SEC chair. A new SEC chair. How do you see that impacting the industry?
I think it's a really positive thing overall. And obviously, crypto has become a somewhat partisan issue, though I think long term it's really important that it remains a really bipartisan issue. Because even if, the quote, like, right side is in power right now, no pun intended, this probably won't be the case forever. And crypto is going to be something that, again, we're all really buying into for the long term. So I think it's just continually important that we educate everyone, policymakers included, on the benefits of crypto and how it's really fundamentally different than anything that's come before. And so it should probably be regulated in a different way. It's not necessarily rocket science. And really what we're looking for, and I'll just speak for dYdX's part in all of this, is regulation and lawmaking that makes sense for DeFi, especially. Like centralized exchanges, a little bit different. Like, that's still a fairly similar model to traditional finance. But in DeFi, like, why do you need audits? Just go open up Etherscan and look any second that you want to. It's like 100 times better. And so there shouldn't be requirements that like some body has to do audit reports or whatever. But maybe there are some requirements that make sense. Like, should the marketing match what the actual code is? Probably, yeah. Like, I'd be pretty in favor of that. So why don't we talk about those things? And it's really just, we've been focused a lot on education for policymakers at dYdX, and that's going to continue no matter who's in charge. But it is something I'm excited about.
Fantastic. And to our listeners, and to builders who might want to build products that use the dYdX order book, what would you say? Where should they go? What should they read about?
So you can check out all the info at dYdX.exchange or at dYdX on Twitter. And if you're interested in me, I'm at Antonio M. Giuliano on Twitter.
Fantastic. Thank you, Antonio.
Thank you very much.
What do you think the long-term end state is for like validators on a network? Because Anatoly has always been pushing the idea of like, there's gonna be businesses that are willing to run their validator at a loss. Maybe like an RPC provider being a chief example there, right? Like they can provide a better core service to their clients by having this, high stake RPC, this high stake validator. And, Anatoly has always been pushing that idea. And then there's also, I think, this other element where if you play this out long enough, like you kind of see margins compress there where validators should operate the network for some margin because there's just, it's a permissionless set. So anybody can come in and join and compete. And I'm kind of curious how you view that world, because this got pretty contentious with the 228 vote where...
Yeah, I think running a validator is going to be super competitive. And it's been pretty competitive for a while, and then all the meme coin stuff happened, and REV was through the roof. Validators were making insane amounts of money. You can look at like how much Jito's public validators were making, or Helios. It's like insane amounts of money. And then I think now there's just gonna be a lot of competition, and so it's very important as a validator to find ways to differentiate yourself. It would be unwise to just think that stake is going to come your way. You need to go out there and work, and it's a real business, so you have to do marketing. And there's a lot of validators that have done well with this, whether it's building RPCs, infrastructure, or building dashboards to track validator performance and things like that. And I want to see more of that. And ideally, there's ways that you can spend a lot of time in like trying to find a way to differentiate yourself.
One thing with SIMD 228 that I was curious about is, like you said, previously validators were making a lot of money just off priority fees and network activity. One of my concerns was that annualizing that and saying like, oh, this is going to go on forever could be a bit risky. Do you think that's a fair take, or would you say?
I think we should annualize the Trump launch. And just see that into the future.
Well, that is some of the takes that I saw were literally people saying, look at how much money people are making on this.
I think 228 would have passed if the vote was going on at that time.
Ooh, there we go. That's a spicy take.
Yeah.
Yeah, it's interesting to see how emotions are so important in these types of decisions. What do you think about the governance system more broadly?
I want to go back to your question.
Yeah,
sorry, what was your...
SIMD 228, I feel like a lot of people ended up... Do you think it's like presumptuous to say priority fees and network activity are going to continue to be doing very, very well such that we can cut out the issuance bit of it?
I don't know if that's like... I don't know if I agree with that phrasing there. I think they're kind of... They're kind of unrelated in my mind. The inflation is more of a way to... Well... I don't know, actually. I don't think it's fair to annualize that, but I do think the inflation is a cost to the network. There's custodians and other validator operators that, depending on how you do your taxes, when you get the staking rewards, that might be considered income at that time. And so those custodians and companies have to sell that SOL immediately. And that is not very good for the price of Solana. Especially if you talk to people that were staking in the last cycle in 2021, they were getting a bunch of staking. The staking rate was higher in 2021. They were getting a ton of money when SOL was at $250 from staking rewards, and then SOL went down to $8, and they got their tax bill, and they were like, "Oh crap, this is a big problem." So that's like the perfect example where it's a cost to the network. 228, I think, would have been good for the price of SOL. There would probably be other variations of it.
Do you have anything you want to ask now?
No, governance is boring, so I take the question back.
All right.
Well, I think I would like to talk about governance.
Okay, let's do it. Let's do it. What did you think about the signaling votes? Like, does it get our incentives in the right hands with validators voting? And we kind of saw some interesting polling techniques for getting stakers' opinions, or even like vote splitting.
Yeah, I think I would consider this like V0, or maybe even less of like Solana governance. I think there's never been that spicy of governance before. 96 was kind of spicy, but this one was like super spicy. It became very political, and that was unfortunate, but I guess that's like the world we're in today. But I want to see, there needs to be a way for stakers to have a way to override their validator. And it's not just a trust me bro thing. It's like, you could either, I don't know what the best answer to this is, but maybe there's a way for validators to signal ahead of time what they want to vote on and lock it in, and then stakers can override them, or stakers get the tokens directly. I don't know if that's the best idea, because like stakers aren't there's probably hundreds of thousands of stakers in like 1,500 validators, so you're just gonna get way more participation through them. I'm also coming at this from the angle of like the stake pool JitoSOL. Like, how can JitoSOL... JitoSOL is probably one of the largest single stakers on the network as far as like stake accounts and things like that. It has 16.5 million SOL, and there wasn't a really thought put into from like Jito side, but also governance side, how do LSTs get involved? How do JitoSOL holders get to vote on these things? And so having some way for validators to lock in their vote ahead of time, or so then like maybe you can rearrange your validator set to get the vote you want. or there's a way for stakers to vote. I don't know like what the best answer is here, but there's kind of a weird thing where like there wasn't any way for JitoSOL stakers to vote, or just like normal stakers in general, and having better guarantees about their voice being heard from like the actual protocol level or the governance level would be good, versus like, hey, I heard stories of like validator or stakers asking their validators to vote yes, and then some of the operators just voted no. So there's a lot of like drama behind the scenes on this, but getting better guarantees would be good.
I hate to have to say this, but doesn't Cosmos have a bad
I was literally going to say, you had a funny tweet of like, anytime something happens, there's like a Cosmos bro that's like, well, we've actually done this already. But honestly, this is an example where I think that's probably true.
One of the useful things I've done. I think before we end it off, I want to ask 2 questions. One is, you guys had a tokenomics proposal that Andrew posted a few days ago, maybe last week.
Yeah, Andrew from the foundation.
Andrew from the foundation, separate. I want to get the lab's take on it, or maybe your personal take on it. I know we have to be a little bit careful about, but where do you see like Solana's maturing? You guys, they're thinking more about how the economics matter, like how the token distribution matters. Is this something that you guys are actively thinking about as well?
Yeah, the Jito Foundation and like people there, and also other just Jito token holders hit up the foundation and me all the time, like suggesting ideas. I think there's a lot to consider. Some people take more of a short-term view and try to optimize for short-term thinking. I think we are pretty good about trying to balance short-term and long-term. There's some long-term ideas that you can do too. I think it's still an open question of what happens, but the discussion should definitely take place on it. And yeah, there's a lot of cool stuff going on. Like there's the buybacks, the buyback and burns. There's like the protocol and liquidity, and there's a ton of other variations. And I would like to see something that balances a short-term and long-term and really positions the protocol to be successful on a multi-year time horizon.
Yeah, I can like feel the presence of David, our head of advisory, like lurking over my shoulder here, as he's been super anti-buyback, just for the idea of like, you got 2 options, like reinvesting growth in any capacity or return value cash flow to the token. And so he actually posted a pretty interesting piece on the Aave forum as they were kind of going through the same discussion. That's basically, it's like other ideas of, instead of buying back, like you can still provide value to the long-term growth of the network, or the protocol or the application, the business, whatever it may be. So definitely I'm a personal fan as well of like the idea of reinvesting that in growth, like building out a new product line, hiring a new dev team, whatever it may be, to like continue the expansion of the Jito product suite.
Yeah. We're also like the Jito protocol is special too, because there's some JTO and JitoSOL restaking. So there's kind of like the buyback and burn, and then there's the incentivizing behavior that you want to see angle. Maybe you could send some more fees to the restakers as well.
I'd also say it's special in another way, right? Because there's not that many DAOs that have strong cash flows that are tied to sustainable products, right? In the MEV infrastructure, I think about 3% goes back to the DAO, and then a 4% fee on the JitoSOL staking yields. Yeah.
And the Jito DAO war chest is insanely big, not only from those, but just the Jito tokens. I think it's like $400 and something million. So yeah, hopefully, I think as we all have seen, like it's really hard to run DAOs efficiently, and there's a lot of wasteful spending in DAOs, and you just hate to see that. Like someone's got to figure out something to make it more efficient. Are there any efficient DAOs that you've seen that are really good at spending and reinvesting on a multi-year time horizon?
Yeah, it's a great question. It's interesting. Like, okay, so we just brought up Aave, and like Mark Zeller has like pretty aggressive personality, let's say, and I think he's done a great job of like righting the ship of Aave DAO, keeping them on the right track. I think he's probably rubbed some people the wrong way, but like that's kind of the nature of doing business in some regard. So honestly, I'm personally a fan of what he's doing there. But like I think there's way more examples, unfortunately, of failed DAOs.
Yeah.
And it's like almost not a lot of lessons learned, right? Like in
Yeah.
hindsight, a lot of it's pretty obvious, right? You build a strong business, you have a great team of founders and core founding engineers, and then you hand your business over to a bunch of strangers on the internet, right? And it's like, okay, shocker, that doesn't work out as often as we'd like it to. So it's about like how can you decentralize the right pieces of the puzzle that don't, in some regard, cripple the long-term success of the business. I think we just haven't figured it out, and in some ways it does feel like we're just going the very long way around, like rebuilding corporate structures. So I don't know. Like,
when we probably shouldn't rebuild it to
they're
this
pretty
extent.
efficient. We've got great businesses in the world, but the question is like, the idea of decentralization and what, how important is that, and where do we implement that? So I really like the interesting, sort of like experiments you've been running with Futarchy. You've had one that is closed and another one I believe that's live right now related to the switchboard NCN. So that's a pretty cool experimentation. In theory, that's like this really, really great idea. It's just a question of like, what do we need to tweak to get those systems live and ready?
I think the protocol should be like the DAO members and foundation should be open to experimenting. I think there's still Futarchy is pretty interesting and something that I think there's more experimentation that needs to happen, but it's an interesting idea. It doesn't work for every decision that you make. I think the setup time is pretty significant of figuring out how to structure it and what the market is and all that. But Futarchy is really interesting, and as you said, there's a lot of examples on what not to do. So figuring out what to do is pretty fun. There's a very large design space there.
Awesome. I know we're running up on time here, but I got one more question I want to jump in here with, which is, so I feel we talked a lot about JitoSOL. We've touched on the restaking piece, but what is the future of the tipping infrastructure? Like, how has that been going? I know it's kind of like a huge engineering burden of keeping this thing up and running. And if you can talk to us a bit about, what your future direction is there, and what maybe a potential V2 would look like.
So Jito tips got sent over to the tip router to kind of decentralize that and upload that. And I would say that the last, Jito Solana was released in 2022. I think it did like $3 of rev in 2022, 3 million in 2023, 650 million in 2024. I think we're at 450 right now for this year. So
it's madness.
The activity on the network went from nothing. I guess we released Jito Solana on the way right before Breakpoint in 2022, and then there's just this massive Solana bear after that, and spent a lot of time building this out with certain assumptions on the network and what type of activity we'd see. And now we kind of have some time to zoom out and take all the learnings from the past year and kind of rethink the way that MEV on Solana works, how the Solana blockchain works, and all the different stakeholders. And I'd say that we're like, the current thing is just a V0 and definitely rethinking about how to make this better. And we don't just want to build on Solana, we want to make it better than it could be without Jito. And we're kind of in this like grow the pie mindset. So trying to unlock a lot of new features and make everything way more collaborative from Jito's angle compared to like the closed source talk to these guys angle before. So there's a lot going on behind the scenes, and hopefully we can talk more about it soon.
Awesome. Well, thanks a lot, Lucas.
Any follow-ups?
No.
Okay.
That's
fantastic, Lucas. Thanks for coming on.
It's been a great conversation. Anything to leave with the people with?
Vibes are good. I think it's vibes are good right now. I think ignore the noise. Best way to ignore the noise is to get in the arena, start building, whether it's reporting and things like that, or talking about Solana data, to building a protocol. So definitely get involved and ignore the market and just keep pushing.
Amen. And you're writing now. You got the Substack fired up. All right, check it out.
I need to cook up another one soon, but that was Mert. Mert told me to write more.
Shout out Mert.
Shout out Mert.
Awesome. Well, thanks a lot, Lucas.
Thanks.